15 September 2023, Friday, MAO with Cal. Now, US crude just broke US $90 per barrel. Now, I've been calling for buy since $70, $65, $75, $80, and now it's at $90. And my target is at 92 to 93. Remember that? Yes, this is happening right now. Is Biden economics failing? Well, it is possible because the CPI data, the PPI data is moving up. But of course, the stock market went up, right? What's the reason? I'll tell you more in detail, because I feel that the equity market is going to set to sell soon from very next week. All right, let's go into details right now. Now, first of all, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, let's talk about this here, guys. You can see that the CPI data was 0.3% for the month-on-month, but the year-on-year itself came out 3.7%. Now, one thing to note, the previous was 3.2 and it's up to 3.7, even though the forecast is 3.6. So this shows that the inflation is going up. But the thing is this, people are concentrating on the PCE right now, telling you that it's because that the CPI it went up, right? But the core CPI itself, right, excluding energy and food and transportation itself, they are still going down. In fact, itself, shelter price came down. Okay, so the market is actually focusing on what they want to focus. And of course, the retail sales came in better than expected, 0.6%, while the forecast was 0.4%. So it's slightly lower than the 0.7%, but the market since it's above forecast. Okay, so again, the market preferred to do what they want to say and what they want to do, right? And the jobless claim came with 220, which is kind of low because the market was forecasting 225. But if you look compared to previous, 217 to 220 is higher. So the thing is this, something like this, they don't compare. So that's how things work, guys. Even for the PPI itself, the last one was 0.4%, came out 0.7%. The market just focused that it's okay as long as the core CPI is going down. So let's take a look at these numbers here. In last year, June, right, the CPI data hit 9.1%, and that was where the market shook. And then from then on itself, incredibly, from 9.1 dropped to 8.3 to 7.7 to 6.5 to 5.0 to 4.0 in just 2 months. Incredible. And then 1 month to 3%. I mean, seriously, has your cost really go down so dramatically? I don't think so. I'm still paying through my nose, man. And the thing is this, July and August, we see now the number has uptick from 3.0 to 3.2 to 3.7. This is a second straight increase. But why the market is not talking about it? As usual, we all know that there are ways and ways to play around with it. So look at the PPI now, the data is moving up, and this is not a good sign because we have seen this before in 2021, and it accelerated itself, and that's whereby the interest rate has been pushing up further, right? And of course, by then itself, by June, that was where we saw the inflation number hit 9.1%. So the point is this right now, the Federal Reserve seemingly is not going to hike rate in about 5 days' time. So the market now is still expecting about 96%, expecting there be no rate hike, rate pause instead, and maybe we have hike in November. But I can tell you this, guys, this is really a bad move because everybody will be happy because I'm pretty sure right now, Jerome Powell won't stun the market. He doesn't do that. He will say that, okay, today we pause, but the next one we likely have to increase. And when he said this statement itself, the market is going to sell again. So to me, it's all right. This is just a delay tactic to just ramp the market up a bit, preparing for the sell. Because as you can see right now, gas prices drove the headline inflation by 0.6% in August, right? So you can see that this is the real reason why things are moving up. And of course, when this all are moving up itself, it will cause an issue. So when will inflation cool to the 2% that Federal Reserve want? Well, it's going to be very tough. JP Morgan strategy says that by late next year, then we can see something like this. And in fact itself, right, you can see over here, for stocks, this could be the worst part of inflation report by First Trust. Now, to me, is that there is a very high chance inflation will really go up higher as the days goes by. In fact itself, I already said there will be a second wave inflation starting from September, and it's really happening right now. Now you can see that the CBOE volatility index VIX has closed at the lowest level in 3.5 years. So the question is this, is there no fear in the market or there's something more to happen? Now to me, it's all right. When everyone is complacent, this is where things really, really happen. Because right now the small businesses are suffering. Now take a look, guys. Now, this has been quite a perfect indicator. Let me just show you why it's called perfect indicator. because if you look at it right now, just give me a moment, there's some technical issue here. Okay, here we go, close it off. All right, so first of all, you can see back in 1975, when the data went below the 91, we have an inflation, okay? Then after that, we have one more again, it happens again in about 1982, and then we have the recession. And then after that, in 1991, we have recession together with the data going down. And for, excuse me, all right, back in 2008, we saw something similar. In 2019-20, we have the COVID issue, something similar. So now look at it, we are actually at the same point. As a matter of fact, it looked very, very alike to this, which is 2008 crisis. So if the small businesses, the optimism isn't there, so the question is, how can you be optimistic with the market? So with that, you can see right now the SPX divided by the unemployment rate ratio shows that whenever there's a bearish crossover, that means the stock market will pull. So where are we right now? We are pretty nearby that here. And of course, right, SPX now is trying to leave itself away from this. But if SPX do break down, this will send selling in the market. So traders, watch out for this. Now, next thing is the US crude, guys. I've been telling you about US crude. Been calling for buy since here at $68, $65. Then after that, when you hit the moving averages, I'll say that $78 to $80 is a very important psychological level. If the market can stay back above $80 per barrel, it will go higher. And truth be told, it went up. Yes, right now it's a bit overbought, but any pullback is a buy. So now you can see it's across the mainstream media that oil rises to the highest in 2023 due to a tight supply expectation. And of course, everybody now is basically eyes on OPEC and stuff, but you can see that they're not moving because they know that they have to bring the price higher. So remember, back then, about 7 days ago, I already tell you guys, US crude is a big elephant in the inflation room. In fact, itself, I said US crude can go higher. And if you look at this this screenshot, I say that we can go up to $92 to $93 by end of the year. So seemingly, it's going faster than expected. And of course, if this happens, our gasoline prices will go higher, our commodity prices will go higher because all the transportation costs, all this is going to affect the regional market, yeah? So with that itself, right, we can see the White House doesn't bother. Their weekly stock of the crude oil for SPR is still at the low end. I mean, seriously, where are they thinking? Are they thinking that they can buy cheaper? Or are they thinking that someone going to help them? Seriously, I don't think any country will help them unless they found something underneath them. All right, so you can see right now, because of that, Biden food inflation record, grocery prices shoot up by 19.6%. Now that's considered a real number. Because right now, right, because when the crude oil price increases, that increase cost, and there's a repercussion effect, and that's the reason why right now food prices are actually going up. And of course, Biden, you should stop eating ice cream because I think that you need to be the White House to settle this problem once and for all. Now, one thing to note right now, the oil prices hit 10 months high, right? The inventory hit 40 years low. So it's a matter of time. They need to replace this, okay? Just a matter of time. Of course, maybe later on, someone from the Western Airlines come in and say they'll give oil, something like that. It may happen, or we can go to the expectation that, right, this will create the oil price to go even higher later, yeah? So now with the crude oil price probably going up higher, so would that affect the S&P 500? Well, it is possible. Now S&P 500, as you can see, the resistance will be somewhere around here at about 4530, and the support you can see there now is at 4435. So these are the cash market. I believe that we may be a touch and go. All right, because usually it's all right for such thing. We must understand that the boys are actually definitely doing a lot of planning, and of course, things if they doesn't get their way done, maybe they have to do the exercise cut. Who knows, right? Okay, so that is the S&P 500. So let's look at what is going to be offered to us right now. Just give me a minute. All right, so this is where it comes from. It's a chart from Carson Investment Research. They did a research in 1950 to year 2022. All right, so the last 72 years, they believe that by 19 September, there will be some selling. 19 September. So that means it's like tomorrow 16, then 17, 18, 19, Tuesday. Now, one thing to note, right, prior to that, from 11 to 19, the market got a little bit go up, right? So something similar. So now they are telling you that pair is selling. So of course, based on the chart itself, it's supposed to break below the stomach area. So I suspect that maybe they're going to go by here or go by here. Okay, just make sure that it doesn't go down from there. If it go down from here, that will mean that the market will drop at least 140 points. That's a lot. All right, if this is going to be happening. All right, so traders watch out for this from next week onwards. All right, now for NVIDIA, it's just one counter to be careful because it has broken below the MA 30 level and just marginally stay afloat. Now, to me, so the upside could be at 499 because that is where usually he take his sell position. And of course, for this itself, right, when the price do break below moving average, usually you bring down. Who knows? We'll see the 404 mark. So upside is 499, downside is 404 mark. And of course, who's selling? Who's selling is CEO, right? He is selling the NVIDIA share for approximately how much money is that? I think $40 million or more. By total sold is of $276 million. This is incredible. All right, guys, hope you enjoyed this video, and I want you guys to remember this. Remember, next week will be a big one for the market. So take care, have a great day, like and subscribe, and share my video. It's Cal signing off. Take care. Bye-bye.